Yo, what's going on, everyone? It's Chase. So today we're going to be covering a highly requested topic, and that is portfolio management. Okay, before we get into this, I just want to say real quick that the examples that I provide are not necessarily exactly what my percentages are. Let's say, like, if I say, oh, I'm 60% in crypto and I'm 40% in USD. Let's just say I pretend that I say that. It doesn't reflect what I necessarily am right now, and also it doesn't reflect what I might be, tomorrow or the next day. You're going to see that I have a very, aggressive way of managing my portfolio pretty much, and it often deals with small percentages, moving, trimming, adding, just small percentages, that way, so when any, because a lot of the times you're seeing people make major decisions. Oh, I'm fully hedged from this area, and then the price goes up, and then what? They have to buy back at a huge loss, or they're completely wrong. So we're gonna start this at the very beginning. I don't want to get exactly into that yet. The first thing I want to talk about is risk appetite for each individual person and the type of person you are. Secondly, I'll talk about how I personally choose to manage my portfolio. And then third, I will show you a technical way to look at the chart and decide when you should be trimming and when you should be adding. Okay, so those will be the three things we'll try to cover. As usual, these videos are off the top of my head. I don't have any pre-written script or notes or anything. So if I do get lost at all or anything, please just bear with me. As always, I try to come from the heart with these videos. I think that's what makes them real, right? Because everyone, people try to make trading and all that sound like it's easy, but it's really not. And a lot of emotion gets into it and everything, and then you start to have some issues. Also, I have a little bit of a sore throat, so just give me a second here. All right, so let's get started on the type of person you are. I'm going to use two extremes to start this. On one side, we're going to look at, let's say a 18-year-old kid. He has, let's say, $3,000, in crypto, right? He has no children, no responsibility really yet, doesn't have to pay rent or anything. He lives home for free. Maybe, his mom cooks dinner every night. No responsibility whatsoever financially, okay? Now, this guy has $3,000, and he has all of that $3,000 in crypto. And he's had it all in crypto since, let's say, Bitcoin was like $12,000 before the big breakout. He had, let's say 400 in crypto, and now it's worth, $3,000, $5,000 or something. If that person wants to be all in crypto, and I mean like, 90 or 100% crypto and 0% USD, I'm not going to blame that person. It all depends on your risk appetite, and if you're very early on in your life and there's no requirements of you, then feel free. That is your personal choice. Okay, now let's take the other side of the spectrum, because obviously there is a safer way. That same kid could be he could have 2,500 in crypto and put 500 in the bank so he can enjoy his summer. You know what I'm saying? It's all relative. But now let's look at the other example. The other example is going to be let's say a man who's about 30 years old. He has a child on the way, he has a wife, and he has bills. He has a mortgage for his house, etc. And let's say he has $400,000 and he's 100% crypto, and he let's say he's 95% crypto, and he has I'm not going to do the math, but let's say he has $10,000 in the bank and 400,000 in crypto. For me, this is not right. Okay, we have to look at the individual here, and we have to say, okay, this person has a mortgage, this person has children, this person has a child on the way, or whatever you want to say. This person has to provide, and his risk appetite cannot be the same as someone who's literally 18 years old with zero financial responsibility whatsoever. The most leeway I could give the man, in this case, the 30-year-old man, the most leeway I could give him would be a 60-40 split or like a 65-35. If he wanted to be 65% crypto and 35%, you know, still, let's say he still has like, you know, 100K in the bank, 120K in the bank, and that's enough for his family to be okay for, you know, a year or two, okay, I can accept it. I think someone in that position should be a bit more 50-50. That's just my personal preference. All right, so let's talk about me now, and because those were the two extremes, right? I want to give you guys an example of what, you know, how this video is going to develop. And we look at these two extremes and we think, you know, okay, this kid can be very risky because he has a lot of he has no responsibility. He's got a lot of chances ahead. Blah blah blah. The 30-year-old man with 400K. If Bitcoin crashes, you know, and it's not impossible, but you know, it's at the moment we're in a bull market, of course. If Bitcoin crashes, let's say it goes down to, you know, $15,000, he's gonna watch his $400,000 turn into literally like, you know, $100,000 or something. He's gonna lose $300,000 for his family. So understand that the risk is sort of relative to your lifestyle, in my personal opinion. Okay. Now we'll get on to me. I will say that my responsibility in life is somewhat high. I don't have any children, but I do have a good amount of family around me that relies on me for a lot of things, okay? And it's not necessarily that they rely on me, but I choose to be helpful as much as I can because they were always great to me my whole life. So I'm not going to be 100% into crypto because I know that, you know, if push comes to shove, I need to be there for them, okay? So I always need something along the side. So, and again, these are not my exact numbers, but let's say that I'm currently roughly around 60-40, okay? It's fairly close, somewhere around there. 60% crypto, 40% USD. We're still strong in the bull market, right? And things seem okay. Now I want to get into, you know, how I sort of manage my portfolio, and it does not come from big decisions, okay? One second. It does not come from very big decisions. It often comes from trimming and adding, you know, anywhere from 5 to sometimes, you know, up to 10 to 15% if I'm extremely confident, if it's like a daily thing or something. All right, so I'll show you an example here. I'm going to bring up an old post of mine, and it says, "My lack of fear comes from preparation. I don't go full doomer on down days because I had already taken profit during euphoric days. I then follow my plan to rebuy what I sold regardless of how fearful everyone is when the day comes." So here you can see that I made sells at 40,731 and I rebought at 29,390. Okay, and this was in Jan 22, right around there was the post. So somewhere right around here. I sold this top and I re-added it down here. And I believe it was somewhere around 15%. Okay, now like I said, 15% is the very highest that I would do all at one time. That's a lot for me. Usually I'm trimming somewhere between 3 to 7%. So I might trim, and I'm going to show you guys how I get this right. I'm not just going to, you know, say, oh yeah, we'll just sell high, buy low. Like, I know it's not that easy, right? But okay, so I trimmed, I added, I trimmed, I added, I trimmed, I added, I trimmed, I added. Okay, my point is that I'm trimming on euphoric up days. Okay, I'm not trimming out of fear. I'm trimming on these big up moves. Okay, I'm trimming on a big up move. Okay, trimming, big up move, trimming, big up move. Sorry, I know I like to repeat myself, but I try to get the point across. Okay, because I know there's a lot of people. What's going on? I'm seeing it. I'm seeing the fear, and I'm seeing talk of hedging always at the lows. This is where you see people talking about how they're hedged. They're hedged. They're hedged. They're hedged. Why? Why are you selling off 100% of your spot or 50% of your spot near potential lows when you could just be trimming 10%, 10%, 10%, 10%, rebuy, 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 rebuy. And if it happens to go the wrong way, right? Say you trim 10% here, right? And price action did this. It pushed up. Okay, well, when it comes back down for the SR flip, add 5% back. Because maybe it's a deviation, right? Maybe it comes up and then it goes back down and you were right all along. But hey, at least you still get that 5% sell. And worst case scenario, you still have a large majority of your spot holdings, okay? I don't want to get mixed up with the percentages, right? But let's say, you know, just say now you have 95% of your spot Bitcoin still, okay? Because now we're getting portfolio percentages versus you know, specific crypto. So now we're zoned into specific cryptos. And if we're talking about Bitcoin, you know, like I said, you would still have about, you know, 90% or so, even if you were wrong here. Okay? And if it happened to break market structure in a major way or something and you want to take more, like when this broke down, you want to take another 5% here, that's fine. You just add it back when the major level shifts on the daily. Okay? Keep an eye on the daily. I'll show you a trick. This is the CM Super Guppy. Okay. If you've followed me for a while, I talk about detachment from the guppy. When price detaches is typically when I'll go for those 15% sells or those 10% sells. And what do I mean by detachment? Detachment is this: when we completely detach from the fast EMAs of the guppy, okay? We can see complete detachment, right? And we start to see detachment here. I don't think I took much off here. Maybe it was like 5% or something. And it was just because I went lesser because I knew it was the Elon candle. This was the Tesla bought Bitcoin candle, okay? Now, guppy detachment. Guppy detachment. Guppy detachment. Okay, so that is a technical way to usually find good places to trim. Okay, and what we're doing is we're trimming off percentages of our portfolio here. So we're trimming off 10%, right? Say we trim off 10% here, and we're buying back, you know, we can buy back a full 10% here, we could buy back 5% here. Basically we're adding and we're building wealth on the way up. So we're getting more and more Bitcoin. Price has been going up. We're in a bull market, right? If the market structure completely shifted, you can reverse this idea, right? Okay, and you could sell on the big bounces, and you could buy on major support levels. You would look towards, you know, daily, 3-day, weekly, and then you once again you'd trim when we came up to major resistance. So the main point of this video that I'm trying to put across is that people need to stop selling the lows and start selling into euphoric sentiment. Okay, when the market is just ripping and running and everything's like seriously euphoric, right? And you could see more guppy detachment on this way up, right? But here's the thing: I didn't sell much here because I didn't think that it was really necessary, right? Because we were fresh off this major consolidation and break above the all-time high, right? When you get a break and you get consolidation above an all-time high, you'll see this in stocks, you'll see this in basically everything. You usually get a strong leg, okay? So that's, you know, I can't say that it's going to work perfectly every time, and there won't be scenarios where it steers you wrong, but this whole guppy detachment thing has been very good for me to get rid of, you know, 10 or 15% at a time, and then buy back a couple percent near the lows, buy back a couple percent near the lows over and over again, okay? And you can sort of, you know, you can apply this to lower time frames, not necessarily the super guppy, but this overall idea. And, you know, just when you think that price is, you know, overextending, and it's, you know, it's just leg after leg after leg, start by taking small percentages. Take off 2% of your spot BTC. Take off 2% of your spot ETH. Okay, it keeps going. Take off another 2%. Take off another 2% of your ETH. Keeps going. Take off another 2%. Take off another 2%. So what I'm saying is that you're never making any type of extremely, you know, where you need to be right decision, because that's a big problem. If you need to be right, you're going to be constantly in a situation where you're selling and you're rebuying higher. You're selling and you're rebuying higher. You're selling, you're rebuying higher. You don't want to do that. You want to sell on euphoric days, and you want to buy when all the people on crypto Twitter start saying, you know, when we dropped from 65 to, you know, 60 today or whatever. And not that it couldn't go down to, you know, 50K or 56K or something. It certainly could. I'm not here to say it's not. This isn't an analysis video. All I'm saying is that you have people still selling into support. This is the origin of this impulse move up that broke all-time highs. It's going to provide bounces. This is support. Why are you selling into support? If it breaks down, right? If it breaks down and it comes back up for the retest, okay, take your 10% off there if you weren't able to sell into the absolute euphoria, okay? I think that's a big problem that people have is just greed, right? And you see price start to go up and, you know, oh, it's going to 100K. No, it's not. It's going to 100K. No, it's not. And you just know I'm going to repeat myself. It's going to 100K. No, it's not. It's going to 100K. No, it's not. It's going to be a steady climb, and maybe one day we will get a euphoric blow off top. We just might. But it's okay if we get that euphoric blow off top, because you're just going to trim 5%, 5%, 5%, 5%. You're still going to have, you know, long story short, you're still going to have somewhere between 50% and 70% of your spot BTC holdings when we hit 100K, as long as you're not taking out these monstrous chunks. And not only would you be taking out monstrous chunks, but you're selling them at shitty at support levels. There's no places where you're not supposed to sell them. Okay, so yeah, let me wrap this up 1 second. Oh, and yeah, I mean, we could talk about altcoins real quick. I do keep some altcoins in my portfolio, not a ton. The ones that I truly believe in, that you know are obviously big development, big use case, or like some you know quote unquote gems or whatever you want to say. But that's a very small percentage of the crypto portfolio, right? So let's say I'm 60%. Let's say I'm 60% crypto and I'm 40% USD. And when you go into that crypto folder, so to say, let's say I'm 25% BTC, 25% ETH, and let's say I'm about 10% shitcoins, okay? Or, yeah, I guess shitcoins was the wrong word. Altcoins, I just, you know, that's what people just call them sometimes. But say I'm 10% altcoins, right? Which I'm usually not. I'm usually about like 5% altcoins or something. And, you know, you can keep a diverse bag, you know, maybe 5 to 10. Wouldn't have too many more than that. At the end of the day, a majority of them, they'll pump and then they'll go back down. So you want to do the same with those altcoins. When they're running parabolic, like Doge just did, if you didn't take any profit, you know, Doge at 30, at you know 45, I don't know what to say. I mean, like I said, if your risk tolerance is that of it's all good if it goes up and you have all this unrealized profit, and it goes all the way back down to, you know, 13 cents or 7 cents once this all wraps up. Who knows? You know, I'm not making a call there, but just, you know, what would seem likely. If it does end up going back down there and you never took any profit, it just seems crazy if you're someone who actually, you know, has to be somewhat financial responsible, like we said in the beginning when we were looking at the adult versus the child, or versus the teenager, so to say. Okay. So yeah, that's it really, you know. We're trimming at highs, we're trimming at the highs, and we're adding back at the lows. And if it looks like we're wrong, we're just bringing like half back in. So if we trim 10% and then we buy back 5% and then it breaks down support, we might get rid of that 5% again, okay? But if we trim 10% and it bounces off support, right? And say we add back 5% here, right? And it comes back up and it's rallying towards the all-time high. Well, you can add back, you know, say, because you still have 5% left from here, right? You can add back 2.5% on this down move, okay, from here. So what I'm saying, long story short, I know it's starting to somewhat seem complicated, and I really don't think it's that complicated. I'm just trying to say to make sure that, you know, don't make any rash decisions. Just be constantly managing, be versatile, And if you're constantly, selling, and you're constantly adding back, and you're, more importantly than anything, that you're comfortably balanced, okay? I woke up today, I saw this news about, the all the coin CEOs and shit, they were dumping everything. I looked at the Bitcoin chart, it was dumping. What did I do? I looked for an area to buy the dip. I didn't even care. I added back some of the stuff that I sold near 65K. I think I sold, 5% up here or something. I added back 2.5% rate near 60K. Okay? And I might be wrong. It might break back down. So be it. I'll get rid of the 2.5% again. But the point is don't make any extremely rash decisions all in one go. When you all in, you're eventually going to be wrong. Okay? And when you're wrong, it's going to be real shitty. So play with those percentages, right? At the base level, you can play with the portfolio percentages, whether you're a 70-30 type of guy, or you're a 60-40 type of guy, or you're a 50-50 type of guy. Maybe you're extremely risk adverse and you're going to be a 70% fiat, 30% crypto type of guy. Look, I don't know you and I don't know your situation. I don't know how much capital you have. All of that is built into it, and that's something where you need to for me, it's like taking a long walk and thinking about these things. That's what I like to do. I like to walk and I talk to myself and I think, well, am I comfortable with, having a 60-40 portfolio favored in crypto at these prices? What would make me more comfortable? I talk to myself like that, and I try to figure out exactly what type of balance would make me more comfortable. And I'll tell you what, we're at some good prices right now, right? $61,000 BTC. 2400 ETH. If you feel like you're not properly balanced, you can slowly take a little bit off the table. Take 5% today. Take 5% in a few days. Take 5% in a week from now. And then you might get from that 85-15 that you're at to that, 70-30 that's going to make you more comfortable, and to where you won't wake up and say, oh shit, we're dumping, what do I do? And then you go and you hedge all of your spot, and it bounces, right? You hedge at the low and it bounces, and then you buy it all back, and now you're just taking losses for no reason, basically just shitty trading, shorting at support, essentially. Okay? Yeah, I think that's it. Hopefully that's helpful. If you have any questions, you can leave them in the comment section, on Twitter, or anything. If you made it to the end of this, please, I would appreciate, a like, a retweet, all that stuff, really helps. Just, get my brand out there, and, I'm here to try to help people. I see there is a lot of, crypto's just blowing up, and, I've been in crypto since 2017. I'm not a true OG. I haven't been here since 2012, like some of those guys, but, I mean, I've been here. I've been full-time since 2017, and I really try to, started trading in 2016, but I've been here since 2017, and I just try to bring information that I believe is helpful to people and is going to actually, provide them with some type of long-term success, because there's so much of this get rich quick, and I'm telling you, for every one person that got rich quick, there's 1,000 people or more that failed trying to do the same exact thing. So this is a balanced approach to portfolio management, how I, manage my crypto, how I trim, how I buy back. And yeah, that's it. Hopefully it's helpful. All right, guys, thanks for tuning in. Subscribe to the YouTube channel too. I'll catch you next time.